Alright, hello guys, glad to have you on board again today. I had available time tonight, so I kind of took a detour into Twitter and had an interesting discussion. At least I wanted to give it some context to today's recording. It all started with this discussion that I had out there with the tweet regarding the current Wyckoff accumulation, distribution, whatever. We're going to explain everything about that. Let's call it just Wyckoff. So I wanted to just extract the value out of this, at least to bring you some viable content you can make use out of, instead of the usual bullshit there is regarding Wyckoff. So kind of today give you again the TLDR there is to know about Wyckoff, what is the actual value you can take out of it when you identify one. But the second thing is that while doing this, I came across some interesting stuff that I think is worth sharing. So we're going to talk about all these things, about why Wyckoff are actually at play, what's really happening, what they do, what's brewing below the surface, to understand what are the likely probabilities of this Wyckoff pattern to play or this one, because TLDR is that we're going to see that Wyckoff patterns have had a lot of variability. So that means you can hardly profit from a Wyckoff. You can just acknowledge the reason why they happen. And that's what I'm going to try arguing today. So let's start with this first, and then I'll explain all the other things that I uncovered in the process later. Keep it a bit of suspense in here. So here's what it is, okay? So the number one takeaway from Wyckoff is that, well, the variability for such structure is so high. The reason why we're going to explain later, but TLDR is that, for example, when it comes to accumulation, there are four patterns. There are accumulation, distribution, reaccumulation, and redistribution. The first two will occur at market tops and market bottoms. The other two will happen in the middle of range. It means the broker will either reaccumulate supply or redistribute it in middle area. That means between major tops and bottoms. Okay, so that's number one thing. If you're mentioning a reaccumulation in the middle of nowhere in all-time highs, make very little sense. Okay, most of the time all-time highs will be distributions, all-time lows and the like, or major bottom is accumulation. For the simplest reason, which we're going to start explaining now, is that what the heck is going on with this thing? So Wyckoff is basically 40 plus years of experience in the market and market making, and saying, well, these patterns tend to repeat. They all have something in common. They come out from a very directional move, and then for whatever reason, some odd way of arbitraging volatility tends to play. That means instead of crunching volatility boundaries like the market generally do, things tend to stop. Like immediately from something volatile, we go to something very less volatile. The volumes are depleted, and the volumes are dropping significantly as the pattern matures. So it feels like the activity that was on thriving is now absolutely lights turns off. So that's the typical way of going through Wyckoff. And remember that many people do it the other way around. They try to identify Wyckoff by the way price behave, and they say, oh, you look at that. This is the automatic rally or whatever shit that is. This is spring. And I mean, fuck it. Just look at it. Do you see how many variation there are in this pattern? Just for the accumulation alone, you've got version 1, version 2, 3, 4. So how the fuck do you distinguish them? There's no way. There's no sequence pattern for this to happen. The number one thing you need to understand with these fucking Wyckoffs, they all have one thing in common. They come from volatile entries to massive slowdown in liquidity. You see the volumes going down and the volatility getting absolutely destroyed in some pretty unconventional manners. Okay? That's really what you need to take away from Wyckoff. Now, second takeaway is, why the heck do this happen? Though you need to understand the basics of market making. AKA, a market maker is just a big institution that is offering trading to clients in the way that therefore it has to have significant supply. Remember, a broker is just somebody who fulfills your trade. You want to buy? I'm going to give you that supply. That means if there are more buyers, I need to have sufficient supply to come up for the demand. That's really the way to go. I'm accumulating supply for the expectations of demands. And when the traders are selling their supply to me, I need to buy it, though I need to take custody of this. And I therefore, if I have excess supply over the demand, I need to get rid of that supply at the potential highest possible prices. Now, if you understand that, instead of saying, oh, the brokers are these manipulators, they're always trying to prove us wrong, don't be stupid. Just try to be smarter than that, okay? Understand one thing, the broker makes his money out of the supply, Okay, if you're the counterparty trade for investors, people who are actually buying and selling whichever asset there is, for whatever reason, remember, but those who are actually asking for custody, those who will hold the trades through time, okay, not the stupid short-term gamblers who are buying and selling on 15-minute charts, or worse than that, those who are buying with the money they don't have, okay, remember, anything that is margined or futures, derivative, any fucking shit like that means anyway the supply is never going to leave the broker. Okay, they know one thing, you're going to close that trade eventually with a profit or a loss, God knows. I'm just going to have to edge myself around the net difference. Just so long as I can have as many buyers and sellers, I can make profit from the difference there is, which means none, and I can still take the trading fees. So that's the best for them. They can make just as much money by doing absolutely nothing but letting you gamble which way there is. On the other hand, where they make most of their money is by taking fees out of investors, those who take the supply away from them. So the number one thing you need to understand for a broker is that the revenue they make is directly correlated to the amount of liquidity they have. So liquidity is the number one revenue source for brokers. And if you understand that, well, the broker is not there to just fuck you up. It's just there to maintain sufficient supply for its activity. Okay, it's two types of activity. The long-term supply and demand, meaning that when long-term buyers are buying the heck out of their supply, what happens? The supply goes down, and they need to maintain that supply to keep the lights on in the casino. For those who are buying and selling with fucking leverage, God knows for whatever reason, they don't really want to hold the custody, but I need to have the assets to spread, to hedge myself for the difference. Okay, I need to find that supply to light up the casino for the gamblers. Okay? Though that's really the way to go. When the long-term buyers are taking the supply away from me, I need to replenish it. Okay? When the problem is, when I have too much demand and my supply gets too much depleted, or deals already around, there's too much long-term sellers. Though I get filled with supply, I've got too much supply, I've got excess supply and not enough demand, I'm going to have to get rid of that excess supply and find somebody who's going to be stupid enough to buy it. Okay? That's just as simple as it is. Though, there's one thing you know out of it. That means long-term traders, okay, they generally tend to take value and they hold custody of the assets. That means, once again, if your underlying asset has no value, fuck it, you'll never see a Wyckoff. Wyckoff is really meant for long-term holders and stuff like that. There's no Wyckoff pattern in 15-minute charts or 1-hour charts. Just don't be dumb. It's always daily, weekly, and the like. That means long-term holders are depleting the supply or selling it in large chunks. And therefore, the broker is either depleted or in excess supply with a falling demand. That's just as simple as it is. So that's why the accumulation and distribution occurs. It's basically an arbitrage between these guys and these guys. That means these guys will buy and sell no matter what. They're short-term trading, short-sighted, whatever. So I need to get rid of excess supply on market tops and I need to replenish on market bottoms after a significant moment, which means generally the markets are very volatile. That means there are a hell lot of buying pressure of people who take the supply from me and don't pull it back. They hold their trades. And same thing goes the opposite way around. When the people sold on the long term, they're not willing to buy right after. They're going to wait for quite some time, and sometimes they don't even rebuy. So that's really the way to go. You have excess supply and you need to get rid of it. You're generally going to transpose it to the short-term gamblers, okay? And the way to do this is, how do you transform a long-term trading area into a short-term gambling area? Wyckoff! Though you know everything there is to know. Wyckoff isn't just a blind manipulation to get you proven wrong. It's just exploiting stupid short-term traders' biases. You just lit up the casino, you figure out a way to make people trade into areas in which actually what happens is happening in the fucking longer-term time frame. So, once again, you will never see Wyckoff accumulation and distribution away from true long-term demand and supply areas. Number one takeaway. The reaccumulation and redistribution, they generally tend to happen in the middle of big ranges because that's basically, I've been depleted in some areas, the long-term traders have been reinforcing their value position and I'm being depleted in the middle of the range and I need some money to light up the casino. So I'm going to use the casino to make people lose their money so that I can buy the supply and replenish my stash. That's just as the way it goes. Now you know everything there is to know about Wyckoff. Don't try to predict them. Don't try to navigate them. They're too much variable. Okay? Most there is to take away from this is there is no way for you to predict because the broker will adjust the pattern according to what you do. Okay? If you smart ass are buying in the support, well, they're going to go the other way around. They're going to keep breaking through this. take away your stop loss. So you have to understand one thing: the broker has access to all your trading information, not just yours and every other trader on the platform. They know where your stop losses are, what your margin levels are, what your liquidation thresholds are. They know information you don't. So how the fuck do you think you can be more efficient than the broker in a variable structure which can take so many variant forms? So try not to be a smart ass, folks. I mean, there's no way for you to know where the fuck you are on the pattern. They're too much complex and variable, because that's the actual end fucking game of it. No, take it away. There's no way for you to use Wyckoff profitably, short-term trading it. So the takeaway is, when you see this Wyckoff, remember, volatile move, huge volumes that generally deplete the supply of the actual broker when it goes to the downside, or fulfills. That means you see a lot of supply going into exchanges to the upside. That's the way to go. That means the supply on the broker is either increased or depleted very brutally. And then generally you see this massive slowdown. That means after this volatile move, volatility is constrained, volumes are dropping like crazy, and it feels like time is manipulated. Hey, yeah, Wyckoff folks, you're into this. Then don't try to smart ass the broker. Just try to be smart enough to wait until the volumes are depleted, the speculators aren't there. That means at that point, the broker doesn't have enough lights in the casino. It has no more people to manipulate. It's just gonna let the price move. Okay? So that's how this goes. All you need to take away is understand why the broker does it, and try to figure out what is the likely thing it's doing. Is it accumulating to get more supply, to replenish the stash? Is it distributing because it has excess supplies and no longer some long-term demand for this? Is it reaccumulating or redistributing in a range because it's trading at a median area? Okay, we know everything there's to know about Wyckoff. Now let's look at Bitcoin. So we have that. Okay, we earn the price. We know one thing. Remember, distributions happen at market top and generally high prices. That means this is where the long-term buyers are distributing their supply. They're replenishing the exchanges, and remember, this is where we've seen exchanges balances being increased quite significantly. Okay, so this is clearly has been a distribution pattern. Once again, remember, very volatile prices, things tend to slow down, huge manipulation. You generally see supports and resistance being broken. That's the sign of beautiful Wyckoff. So massive Wyckoff in here. The structure of it, I mean, fuck it, once again, try to look for automatic rally or whatever shit that is. Just understand that the volatility has been destroyed. You clearly see those volatility manipulation, supply getting deposited in exchange. It feels like, for whatever reason, time is just non-existent anymore. After some energy, there's nothing, the market is flat, and then we go out of it. And what happens is you will see that exchange balances should at least stabilize or deplete, because remember, that's the goal. For the exchange to get rid of the supply, it's been sold. That's really the way it goes. The longer terms holders have been selling, therefore the broker had that additional supply and he needs to sell it to someone else, and it's basically sold it to short-term gamblers who will most of the time get liquidated as the pattern goes out. No, okay, that's really the way it goes. That means the losses have been ported to someone else. The broker has managed to find someone to buy that liquidity in shorter term frames to get rid of the longer term selling pressure demand. Okay, that's distribution 101. Then some people argued that there has been some accumulation in here, and I kind of would agree with that. Remember, accumulation can only happen in the long-term support, and we were at this price. Okay, though I was agreed with the accumulation in here. I actually traded that price, and then I thought the trend will reactivate. I was in the part of that super trend narrative, and I definitely have been proven wrong. Remember, we've gone down once again, and I was like, ah, damn it, another Wyckoff. Maybe that's surprising. That means, well, they're accumulating again ahead of the second trend follow of some sort, and we're going to keep going to the targets. Remember, I had targets slightly higher, 77K back then, video to prove them. And this is where I would have profit taken some of Bitcoin back then. Well, though I was surprised, what turns out in here is that this was a redistribution. That means the broker distributed, might have eventually reaccumulated a bit in here, but figured out, yeah, there's not enough demand, you know what, get rid of it. Get rid of it. Though they redistributed, and this is where we entered very violently in this absolute brutal bear market. And now what happened? Oh, longer term area, guess what? Hey, rising moving average, they've been reaccumulating once again in here. The structure is pretty damn awful, but this clearly have been first Wyckoff in here with a massive spring or whatever you want to call it. Anyway, The volatility has been destroyed. The volumes were absolutely non-existent. Like the volume were massive spikes between the liquidation and then, ooh, nothing. It's like dead. Yeah, okay, that's the way to go. So typical Wyckoff in here. Of course, FTX has been another, I think, unexpected catalyst, but that's the way to go. So we get rid of it. We get out of the structure to the upside, massive volume. Remember, once again, that means the broker couldn't find any more short-term gamblers, so it gone out of this pattern, breaking it to the upside. As you can see, huge momentum, and therefore nothing happens afterwards. We're into this range now for 6 months. Question is, what is this? Is this reaccumulation or distribution? Remember, coming out from the bottom in here, creating that range, there was only 2 options there. Either we distribute or we reaccumulate. Okay? Are we in a selling area? Not at all. So first things we know for sure, not for sure, once again, I'm a probability guy. I don't know the future. No one does. And those who pretend are absolutely assholes. So let's try to make it obvious in here. What are the probability shifts of this to be a distribution against a reaccumulation? Like we stated, reaccumulation happened in the middle of ranges. Okay? Distributions happen in sellable areas. So does it make sense for smart money to sell in here? Absolutely not. Like I mention you each and every fucking week in the weekly updates, there's nothing to be done in here with absolutely trading boring and uninteresting prices for smart money managers, so no one is selling in here. Some people argue saying, yes, I do, you stupid Phil, you just don't see it. Big wallets have been depositing in exchange. Yeah, let's look at it. Do you see any of it? I don't see any of it, frankly. I mean, let's go back to Bitcoin. Do you see any significant shift in the supply in exchanges? No, absolutely not. So I'd like to see where your big buyers, where your big sellers are. Second thing is that doesn't mean someone is depositing in exchanges to sell. If you just make that assumption, you need to learn a few things. We'll explain that later. But critical importance to me is if we were trading at 41K now, we would be in a sellable price, and I would be concerned for this to potentially be a distribution. Frankly, now I think chances are very, very asymmetric. I mean, we're far off from 50-50. We're certainly not at 90% and 10% chances, but frankly, there is a lot of room to work in between. But we're definitely not 50-50. Probabilities for this to be a reaccumulations are much more significant than the other way around. For the reasons explained, we're in an area in which distribution doesn't really make much sense. There are other arguments which I'll explain later, okay? Just piling up the argumentations in here. So one thing, it pretty much looks like the market is reaccumulating. Okay, so reaccumulation would make the sense in the context of the broker needs additional supply. Okay, remember? So let's just look at it. Oh boy, remember we said the broker in here is probably distributing. So the end game of this area, distribution and redistribution, is that at the outage of this pattern, we need to see the exchange get rid of. That means they find some people to buy their supply. They got rid of the excess supply. You need to see this reverse course. Now we had the accumulation in here. Do you see a reverse course? Have you seen exchanges going higher again? No, you didn't. We're at critically low exchange supply. That means despite this beautiful manipulation, despite the actual FTX event, the only thing that happened out of this is people taking the supply and putting it away from exchanges. And remember, that's what the exchange doesn't want. The exchange revenue is directly correlated to the supply they hold. If they get depleted of their supply, that means their capacity to fulfill trades is diminished. And their competitors, if they have more liquidity than them, will take on these trades instead of them. So that's really important for a broker to maintain liquidity. And they've been drained out of it. Very significantly. I mean, look at it. If this was a successful accumulation, it would have reversed. That means as price going out from this to the upside, we should have seen the supply increase again, which isn't the case. So in here, we have clear evidence that something went wrong. That means despite the attempt to manipulate on this longer-term supply, on this longer-term support, and trying to accumulate supply by playing the same old Wyckoff, we've seen that there was a huge down final move, FTX, but we still gone higher again. So that means the outcome of this was accumulation, but it failed. No additional supply. So if this is reaccumulation, look at what it done. It depleted even further. So my question is, if we go higher, is it finally going to succeed? Meaning the supply finding its way into exchange. That means these guys have finally found their way to getting some supply, or at least getting efficient at reaccumulating supply in the bottom of the range. But if we keep going lower, this is a possibility as well. I'm not saying this is going to happen. This could happen. But if this turns out to happen, meaning we go up and the supply goes down, I'm going to be very, 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 very scared. But by scared, it just means we're going to go into an unconventional territory. Remember, the current market supply is roughly 9%. Remember what we stated earlier? 15% is a critical supply area. Below 10%, that means, oh boy, we're starting to have significant premium on the price multiplier. That means each and every additional dollar of buying pressure is going to translate into $2 or $3 of actual market cap increase. Below 5%, it goes parabolic. That means the lower the supply as it tends towards zero, the more the actual multiplier will be on the market cap effect. So very, very important to understand. If this is a reaccumulation, and if the supply isn't there to be found after it, that means the second failure in a row to reaccumulate and replenish the supply, if it fails 2 times in a row, I'd be very concerned. Very, very concerned. I'll explain later why. I damn hope that this is reaccumulation, and this time around they're going to be able to find the supply. Because if it doesn't, we are on the verge to go somewhere closer to 5%. We're at 9% now. That doesn't mean we'll be at 5% in a day. I don't expect some depletion like it was for FTX. But frankly, if the trend doesn't reverse, it's going to be scary. We're going to tend closer and closer to more multiplier effect on each and every dollar going in. What matters to me the most on top of it, if you take away this information when it comes along with prices, is to say, remember what we stated, the median is 40K. At 40K, we'll likely find the actual supply that we're looking for, because in here, some longer term holders might be taking some profits. Of course, this is very less likely going to be getting it off the table and just selling it all. It's probably just going to be partial profit taking. But still, in here, the broker has a significant chance to be able to have some supply to replenish what it failed to reaccumulate in here, to accumulate there and reaccumulate there. If both attempts fail, the broker will probably going to try again in here. This time around, I'm pretty damn sure it will find some supply. My question is, I better damn hope the demand will not outpace it. Because remember one thing, it's a balance of supply and demand. If in here we find some marginal supply, because the longer term holders are taking some partial profits, they're probably going to be having a hefty 2.5x or more. Probably, I mean, no one buy clearly at the lows. Just don't try to be dumb. Let's call it an average, okay? Let's say an average buy price of 21K. If we're trading 40K, that means you made a 2x. That's a pretty decent move. In here, definitely there's going to be some smart money profit taking. Not entirely, but partial profit taking. Okay, so let's assume the broker finds out some supply. If in here, for whatever reason, remember 9% is already a critical supply. If for whatever reason, any additional percent that could be pulled into exchange by smart money is bought by the dumb money, or I mean, remember, we would be trading in the mid area of the range. That means in here, there are likely chances to find either both buyers and sellers. So the question is it going to be balanced, which means we can stay there so that the broker, after manipulating the short-term traders, figures its way out to replenish its supply, and then either that was another reaccumulation or that was the distribution. But in here, the probabilities of one or the other will be much more balanced this time around. Well, like I said, if it goes down afterwards, that means, well, we've made this year's market top, probably next year's, and going to stay there for quite some time. And we'll see how it goes. We'll find the rebalance out of the critical supply area which we're in. We started going in the midst of last year. Since this massive, violent, reverse bear market stuff we're in, the only thing that doesn't go right with this narrative of bear market and, oh, we're all going to die, we're back down 2019 for another couple of years, is that fuck it. It isn't the same market. Back then, we had more than 20% on exchanges. Today, it's not the case. The exchanges need to replenish. Because if there's just a bit of demand coming along the way, be it ETF or whatever, they're gonna be asked for their supply, which they don't have much of. So that is what you need to understand, folks. Why I am concerned about the potential reactivation of a bull market in a much more unconventional manner is I better damn hope that if this is an accumulation, a reaccumulation, it better has to be successful. That means I hope that most of the longer-term supposed holders who said, I'm going to hold to infinity, I hope that they will fail on this, and they will start selling and saying, you know what, this bear market was too much for me. I bought at 40K and I'm gonna get rid of it. You know what? Get me out of it. If this happens, the brokers will have the money they need to replenish the stash. If it doesn't, which means this fucking buy and holders narrative turns out to be, fuck me, I'm never gonna sell it, and I really fulfill the promise. And if the supply is nowhere to be found, and if the rare but existing smart money partial profit takings are outpaced by, for example, ETF spot demand, or even worse than that, just retail traders piling in again because they get filled by the narrative of their Bitcoin bull market and the halving and stuff like that. And like I said, if they are gambling in the casino, okay, just buying and selling with the money they don't have, that doesn't matter. Anyway, the broker will still have the liquidity in its house, okay? But if these guys, this time around, get filled with a narrative of, well, Bitcoin isn't Bitcoin if you don't hold your keys, and if they, and only if, and really rough speculation on my end in here, if for whatever reason in here the demand for true supply, remember, buying it and taking it in self-custody outweighs the potential sell pressure, if this turns out to be a reaccumulation, it better has to replenish supply, because on the way to all-time highs, this is where, same old story, remember Bitcoin, it's stupid. Most people will always fall for the narrative, 21 millions, not an additional one would ever be created. So you rather like to get one now before there are no more availables. But remember one thing, Bitcoin has this capacity to create absolute bunker type trading. But remember one thing, so long as the people deplete the actual broker's supply, the closer it goes to 5%, and even if it ever dies below that, oh boy, you really have never I've never seen something similar to this. Because finding the market top in a market with demand and no supply to be found, boys, like I said, it's an exponential curve on multiplier effect. That means each and every additional dollar will have significant increase in the market cap. Of course, they will be short-lived. Remember, this will be a bubble. That means outrageous, stupid demand of people willing to pay stupid prices for these things until, of course, we've exhausted the last buyer or we have found sufficient longer-term selling pressure to face it. So the truth is, once again, it's a matter of supply and demand. All I'm going to be saying is, if there is limited supply on exchanges, and if there's the same old stupid outpacing demand, but if these guys, instead of going margin and stuff like that, get to require custody of their funds, it's going to be problematic, because we'll be in the first ever bull market where demand goes as it is, just like every crypto cycle. But if the demand is what it is, but this time around people get into asking for custody instead of over leveraging their trades, the brokers don't have the supply. And that's the first time it ever happened. We've never started a bull market. If we are on the verge to go all-time highs, or at least trading closer to all-time highs, with no supply on exchanges, and if it keeps being depleted somewhere around 5%, folks, you're gonna be surprised. It's gonna be nothing like 2021, nothing like 2018. It's gonna be something that clearly neither I or you will be able to predict how high it's gonna go. Because it's gonna be absolutely unpredictable. It's gonna depend just how much the smart money we're gonna be willing to put back into exchanges versus how much the stupid crowd will be willing to pay for the thing. And there's one thing I can tell you for sure. There are many, many, many people who are targeting 2030 for Bitcoin, me included, not selling any of it. You have to buy a significant amount of price if you want my Bitcoin until 2030. And that's what scares me the most. Most people now are holding for longer times than 2024. If we have yet another stupid bull market without supply, that is the only thing I'm concerned about. Not for my pockets. Thankfully, if this happens, I'm going to make a hell of a lot of money. But the thing is that that's not the purpose for me. I would like this market to avoid another bubble, because frankly, it's just very, very bad press. I would like this thing to avoid going down this thing. But until then, if there's one key takeaway for you now today, it's exactly summing up all we've learned so far. Regarding Wyckoff, just don't try to play smart ass. Just try to be smarter to understand that the broker has an hedge on you, so just don't play his game. Just stop gambling in the short term. Don't leverage your trade. Don't margin or margin very little so that the broker can't move prices into your stop losses. Just try to trade large enough away with invalidation so that the broker just can't take you off. Okay? Very, very important. Don't try to smart it ass. Like, yeah, I figured out the Wyckoff. I know this is the spring or whatever shit that is. Just try to be smarter than that. There's so many variables and variants in this pattern for you to be fucked anyway. Most importantly, the broker will adjust the strategy on the go. So it mostly depends on what you and others are doing. So there's no way you can predict the broker on this side. Statistical odds are against you. So forget about short term. What Wyckoff tells is actually the opposite. It says, forget about short term. Don't play this game. Don't do this. Just get the message. That means the broker has a problem with supply. Either it has too much of it or too little of it, and is gonna play around the time variable to fuck up just as many short-term traders as it can. And whenever there will be no more short-term traders to be scammed, it will have to move prices one way or the other. That's the way to go. The broker at some point will have to let go. It will remove its remaining supply from circulation, which will move the price violently. That's why we always go out directionally from these Wyckoff patterns, just as fast as we got in. So you have to understand this. The volatility might increase suddenly for no particular reason. It doesn't have to be a catalyst. I see people now saying, we lack of a narrative, we lack of a good reasons to go higher. I can tell you one thing. If you stop gambling in the short term, it will happen without a catalyst. There's no reason to explain why or build a narrative for it. So long as there is no more speculators, prices will go up or down. But the broker will have to get us out of this area to find new speculators. It's going to have to increase volatility again to bring back activity on the casino. You have to understand that. It's not about narratives or reasons why to go high or low. We're in the fucking middle of ranges. So it isn't an interesting price area. It's just the broker probably needs to refill the tank, which it failed to do on the bottom, because it took away some much more longer term demand that it probably expected. That means something is different. It's not the 2019 again. The brokers are not in excess supply with much more room to work with and to give us into this long and painful bear market. They've clearly lack of supply, and that's visible on chain. So you do whatever it is that you want. All I'm saying is this is very less likely a distribution. It's much more likely a reaccumulation. It better has to succeed. If it doesn't, next area is probably somewhere around 50, somewhere around 40, where I think there is a much more significant chance to get balance in here. What's going to come out of it? I hope it's going to be a distribution, because if it doesn't, and if it goes higher, and if it go in all-time highs with these between 10 to 5% supply, boys, it's not going to be pretty. Okay, it's going to be a matter of supply and demand, and it's going to be absolutely unpredictable. And all I can say is that if the long-term holders do stick to their plans of not selling any fucking thing, and if the demand goes bonkers again, there is clearly not enough supply, because 5% supply in the beginning of the phase which we're ahead of. Remember, the maturity of Bitcoin now has grown significantly enough. Now we're in the model in which, we're in the model of early majority. That means the early adopters, they're already there. The innovators as well in here. We're far beyond these things, okay? Remember, we're past the tech enthusiasts, we're past the visionaries. Now it's really the adoption of early majority. It's gonna take a long time, folks. Remember, we're this, and it took more than 10 years to do this. So don't be dumb enough to think it's gonna happen tomorrow, okay? It's gonna take another decade at least to get to the early majority to be fully there. The thing is that the growth from early adopters to early majority is we've taken away 13% additional people in a previous cycle. Now we're going to take 34. That means it's still the double. It's still more than a double in terms of relative number of people. But remember, the markets trade the rate of growth. So when you come out from 2.5% of market shares up to an additional 13, you are 5x in here. So that's really the thing. The previous growth factor was much higher than what it will be. That's the reason why I don't think an outrageous 2018 type bubble is down the corner. But that doesn't mean that it won't happen if we have 5% supply. The adjustment variable for a bubble to occur in the next cycle is this. If the brokers fucking fail to get their hands on supply, and if the adoption of the early majority is buying spot Bitcoin and taking it into custody instead of gambling like fucking crazy in derivative markets, and remember, the early majority is made out of pragmatists who adopt new innovation only after it's proven and they feel comfortable that it won't put them at risk. Once again, this doesn't correlate to outrageous, stupid fucking margin calls and stuff like that. I think these guys will buy the thing for what it is. They will be willing to put the price, and if there's no supply to be found, money is going to be playing the dangerous game of volatility again. And that's what I fear the most in the forthcoming cycle, that the dumbs get to pile up crazy and that the supply is nowhere to be found. Other than that, if the balance in supply is there and we can maintain at least a minimum 10 to 15% supply in exchange, things should be eventually volatile, but fine. I wish we're not going to go down another bubble into Bitcoin. But if for whatever reason I see the prices going higher and higher, going parabolic, and supply being depleted somewhere closer to 5%, you know what? I'm not going to be selling. I know that some people will start piling up, which means I know I will be able to take a premium out of the expected prices I wanted. So that's all for today. I once again don't want to give you any glitters and like saying, oh, he said we're going to go to much higher than predicted. No, that's not the message. The message is I see the preliminary elements that tell me something is going wrong, because I see Wyckoff pattern that instead of replenishing supply are actually failing to do so. And if this pattern consistently keeps playing in the forthcoming Wyckoff pattern, I can definitely say one is going to play its game somewhere around 40, because this is an area in which the broker will try again to find some supply. If they fail out of it, big problem, because out of this area there's no more resistance but the all-time highs. So be very careful. I'm not saying this will happen, and if you ever come close to this, then just don't. I never said this. All I'm saying is I think 40k is the next battle. I think 40k is going to be critically important for the forthcoming elements in Bitcoin, and if supply is nowhere to be found out of this area, or if it's still unbalanced to the point that it keeps deplenishing toward 5%, fuck, it's going to be very unpredictable price action. That's all I'm saying. That being said, I'm going to leave you guys with that. Okay, take away what has to be taken away. The Wyckoff pattern which we're in is kind of advanced enough. It's damn mature. Don't try to play it. Don't try to buy at the lowest. Just don't speculate. Just let the broker play with itself. And whenever there will be not enough sufficient volume to manipulate, then we'll move prices again. Okay? That's the way it goes. We're in uninteresting prices. If you've been a long-term investor, all there is to know is that if you bought, just hold these prices. The current trading activity is either a reaccumulation, very less likely a distribution. Okay, that's the way to go. Distribution would make no sense. That means the broker will get rid of the limited 9% it has today in the hope of what? To buy again at cheaper prices? That means you really think the broker definitely thinks it has significant odds to be able to find some volume at 12k in Bitcoin? No, you know everything there is to know. These people who actually say things that makes no sense, they say, yeah, the broker is going to sell because we're going 9k, so I'm going to buy. Fuck it, you don't understand, folks. You just said exactly the opposite of what the broker wants. The broker doesn't want to go in an area in which you're going to take all the supply and is going to have available. So if you say it's going to go lower, so I'm going to be able to buy more. No, fuck it, you don't really understand. If the broker wants to go there, it's because he knows he's going to get more supply than it will be taken away from. It just doesn't make any sense to go there. That doesn't mean it won't happen. All I'm saying is, if the broker sees that it can get more supply in here, that's what it's going to be taken away from him, it's going to go there. But it's going to take quite a lot of risk to pull you there. Remember, the market makers hold less than 9% of supply. 9% is significant enough to move the market, but not necessarily to go against the value. And that's the final takeaway. Remember these things. These assets aren't just speculative assets. You can't create a Bitcoin out of nowhere. Either you have it or you don't. Playing the game of poker faces and say, you know what, I'm going to get the supply that I need. If you fail, you're going to be put it out of the game, because that means the supply you sold is going to go into someone else's pocket. It's going to take your business. And that's what I've always mentioned, the risk of musical chair. For now, brokers tend to play all together. Sometime, if we go closer to 5%, the sharks will start to eat in between themselves. If there are no more fishes to eat in the sea, the sharks will start hitting each other. Sorry. And it's going to be more than enough for today. So I'm going to see you guys later. Hope you've learned a few interesting things. out of this. Don't get overhyped. Once again, nothing to do here. And that being said, I see you guys later. Bye-bye.